What's up guys, this is Daniel. In this video, I'm going to be explaining to you the top 3 penny stocks for 2020 and beyond. We're going to be looking at the fundamental analysis, what makes these companies have potential for growth in 2020 and beyond. We're also going to be looking at the technical analysis to determine the key price point levels that we can use for potential entry and exit price point levels. We can use the support and resistance levels that we marked in this video for future use as price changes fluctuates through time, guys. So also, if you are new to the channel, I talk about the stock market, specifically subjects that relate to stocks, options, investing. If you're interested in any of those subjects, make sure you subscribe to the channel. I'll be making videos every Saturday, Monday, and Thursday. Let's get into the video. Alright guys, so the first company we're going to be looking at is going to be NIO. I'm going to give you exactly what are the top factors that we need to be looking at if you're interested in investing in the company. We're all going to be looking at what is the downside of buying, trading this stock in the short term. I'm going to explain to you exactly what you need to look for and explain the factors in detail. Now let's look at the fundamental analysis, guys. So the market cap of this company is $4.28 billion. And the share outstanding is 1.13 billion. Insiders own 52.52% of those shares, and institutions own 49.80%. On average, the company moves up or down 0.38 cents or consolidates within that range. Fortunately, the company is losing a lot of money, and it's in need of funding, specifically in 2020. That is going to be the factors that we're going to talk about later on. Now let's look at the factors that's going to help you make a decision when it comes to NIO. Now the first positive factor is, this company is in a positive sector that can see a huge exponential growth in the future. It's in the electric vehicle manufacturing business. Specifically in China, there's a lot of need for electric cars since the country suffers a lot for air pollutions. In Beijing, Shanghai, and other countries around China also are in need of electric vehicles because they want to preserve and have, not polluted air within that region. Since the company is based and founded in China, there's potential for even the government to help to fund that company so they'll be able to use it to help the country in a positive way. Now, the second factor that you might look or invest or trade in the short term in NIO company is that they are constantly partnering with other companies within the country and other companies in other countries to advance their AI and their vehicle. Currently, the company partnered with GAC, which is a Chinese company that's going to help fund NIO for up to $150 million, and it's also helping in the AI systems. And also there's going to be Intel Mobilia that is also partnered with NIO to help with the advanced AI features within those vehicles, guys. So the third factor that's super positive that you might like, to hear from NIO is going to be NIO is coming up with another new model that's going to be launched at the end of 2020 that's going to be competing with Tesla Model Y. Now that's going to be a game changer if there's going to be a lot of need, a lot of demand for this new brand of car that NIO is going to be launching. Another factor that can make NIO super bullish in the short and long term is they upgraded new battery systems. In the past, they didn't have that much of a very good, battery systems, but now they increased from 84 kilowatts per hour to 100 kilowatts hour. And also they announced that they're going to be allowing battery swapping. They'll be introducing to those vehicles. So in case you don't have any charging stations around your area, you'll be able to swap batteries effectively and quickly within those vehicles. So those are the important factors you need to look at that are super bullish thesis for the next few years to come. Now let's look at the downside. The main factor is the company is losing a lot of money, and in 2020 the company needs at least $1 billion in funding just to sustain and stay afloat. However, China, the Chinese companies and the Chinese government are supporting NIO currently by allowing them to borrow money, specifically with the issues with the coronavirus going on. The Chinese banks are allowed to give loans, and they're not going to be able to have a problem, securing any kind of funding for their needs. So if NIO gets an outsider investor or any kind of thing for up to $1 billion, the company can start to launch and meet the expectation needs for the vehicles that have an order currently right now. Now let's look at the technical analysis to figure out exactly what is going to be the key price point levels that we can use to enter or exit the trade. Alright guys, so now we're going to be looking at the technical analysis for NIO. The company IPO'd at a price just a little over $6, and within a span of a few months it hit a low of $1.19. However, the company reported good earnings. They did not lose that much on the third quarter. So as you can see on the chart, there's a lot of volume that came up and start buying the company. So we're going to be looking at what key price point levels that we can use in order to follow the small trend that got started by the positive earnings report on the third quarter. So the support level that we're going to use ultimately is going to be, the $1.19 area. That is the lowest that it made, but currently NIO is trading at $4.08. So if it continues to trend up, our first target is going to be the $6 mark, just a little below $6, $5.96 mark. Just going to be if you want to trade it in the short term. If you're a swing trader, that is going to be your price target. But however, if you're a long-term investor, you can potentially hold the company to get huge profits. The company might retest the all-time highs that it made at around $13.90 area. Before we move on to second stocks, make sure you smash the like button. If you're new to the channel, make sure you subscribe to the channel and leave a comment, turn on your notification. Now let's move on to the second stock. Guys, so the second company you're going to be looking at is going to be Kinross Gold Corporation. It's a company located in Canada, and it's in the basic material sector. Now let's look at in detail some of the fundamentals about the company. The market cap is $6.78 billion, and it's profitable net $718.6 million. And the company does not pay dividends. However, it is profitable, which is a positive thing to do when you look at penny stocks. The shares outstanding is going to be 1.27 billion. The share of the flow is going to be 1.25 billion. Insiders own 3.52% of the company, and institutions own 69.90%. So that means that a lot of hedge funds are owning this company at this moment. On average, the company moves 18 cents a day, either to the up or downside. There's going to be not a lot of volatility. That's why when you look at to trade this in the short term and swing trade, or to buy and hold and invest in it, you want to see that average true range to be lower. So that is pretty good. Now, fundamentally, this company is pretty good, and you want to invest in gold, because gold is one of the things that is used as a hedge against the overall market. So in case some bad things happen in the markets, market volatility, market starts to crash, you hit a recession, gold prices start to go up, and these companies also, start to trend up to the upside. However, these companies are stable, they're profitable. If nothing happens, they're still going to be producing income, and the stock is not going to be drastically not affected, but there's still potential for this company to grow and to expand. As you look at the technical analysis, we're going to be looking at how the company is actually in a bullish trend and actually broke out in the short term. But now let's look at the technical analysis to determine what are the key price point levels we can use to get involved in this stock. Now let's look at KGC stock chart to determine and use technical analysis to determine an important entry and exit price point levels that we can use in the future. We're looking at the entire all-time chart for the company since its IPO date, and the lowest that it's gotten is $1.21, and it's currently trading at $5.57. So if we are just technically looking to get involved in the stock right now, we can use the $2.50 area and our target is going to be around $11 just in the short term. And as you can see, the stock is likely going to break out around $5.60. Currently, if it breaks out of that price point, our target is going to be the $11 area. But it's slowly crawling back up to the upside. So, and there's solid support below it. So if you want to get involved in it in the long term, you know, this is a good price point to get involved in it and just hold it, since it doesn't move even that much up and down. And the volume is also increasing at the bottom, as you can see. So there's a lot of, you know, people getting involved, hedge funds buying the stocks, you know, so there's a good potential for it to move the continuation to the upside. Now let's look at the third stock. Before we go into the third stock, make sure you like and subscribe. If you're new to the channel, turn on your notification bell. Now let's go into the third company. All right, guys, the third company is CPE. It's actually an independent oil and gas company that is located in the United States, specifically Texas. It's in Houston, Texas. The market cap of this company is $1.14 billion. It's generating income of $233.5 million. The share outstanding is going to be 400 million, and the share of the float is 394.86 million. 99.5% of the shares are owned by institutions. On average, the company moves 18 cents up or down to the downside. I know we talked about NIO, which is an electric company. However, we're looking at a petroleum company, which is going to be the last company. Now, let me explain why I picked this specific company. Within the next few years or decades to come in the future, the US is actually wanting to become independent from oil importation from abroad. They started to produce, you know, their own oil within the United States. You know, so these companies are actually going to be profitable in the future, become more profitable in the future when the US stops to import oil from abroad. You know, so these companies start to become, there's going to be a lot of need for oil, and these companies start to become booming because all of the need for oil, petroleum is going to be used by these companies, provided by these companies, guys. So that is one of the factors that we look for. If you're going to just buy and invest in this company and just hold them in your portfolio for the long run, this is one of the best companies to hold that's profitable. It's in Texas, it's in Houston, Texas, and it's probably have one of the best ratings out there for employer as an employer, and that is the main factor. Now let's look at the technical analysis to look at exactly what are the key price point levels that we can use to buy and get involved or exit and move out of this stock in the future. Well, let's look into the chart. All right, guys, now we're looking at the chart for CPE. This is the all-time chart since its IPO, and the lowest that it's ever gone 0.98 cents. And it's currently trading at $3. So the stock has been trending in the downward direction for the past few months since oil prices have been tumbling down a lot. So it's getting closer to the ultimate support. However, you can see the volume is increasing at the same time too. The selling volume is increasing at the same time too. And if the stock continues to go down, if you can get involved with it when it approaches the lowest that it ever gotten, around like even like $1 or $2, even if you get involved like right now, you know, you can risk off of the ultimate all-time lows for the price point. And the target for this company, if you want to invest in it in the short term or swing trade it, it's going to be around $6.90, around $7 area. And if you want to just buy and hold it for the long term, you know, there's a potential for it in case some situations change with oil prices. This is a good price. This is a good price point to get involved in it, because there's upside potential for the company to recover. As you can see, in 2009, it kind of bounced back after it hit the support of 98 cents. It kind of, you know, started to trend up a little bit, and it even went to a price at $9 when it bounced. You know, so that is going to be the last stock. If you are new to the channel, make sure to subscribe to the channel, smash the like button. If you have any questions, drop it in the comment section below, and I will catch you on the next video. Have a wonderful day.